So what funding and investment options are there for you and your business? Are you looking to expand and grow your company? If so, then maybe the first step is to explore your funding options. And there are many ways to finance your business growth or venture, from traditional bank loans to alternative financing like angel investment or crowdfunding. But no matter which route you take, it's essential that you do your research up front. Ensure you understand every aspect of the loan process before signing on the dotted line. Small businesses are the backbone of many economies, but sustaining that growth and operation can take time and effort, and seeking financing is often one option for small business owners to consider to keep their business growing the way they want to. So the first step in securing outside investment for your business is understanding what financing you need for your business model. And there are several categories of finance that might be suitable. So things like debt finance, equity finance, asset finance, invoice financing, government grants, traditional bank loans. But knowing which option works best for you will help you narrow down the search for potential investors or lenders. And one route is alternative financing. Alternative finance refers to the capital from sources other than traditional finance institutions such as banks. Funding options might come from individuals or entities that are willing to provide funds in exchange for ownership or repayment from the business with an agreed upon interest rate. Certain investors may be willing to provide capital without expecting any form of repayment in exchange for that equity, which makes them attractive options for many small business owners. Investors often inject funds into the business in exchange for that share of future profits, meaning entrepreneurs don't have to give out large or take out large loans or sacrifice large amounts of equity to grow their business. Furthermore, with investors on board, it's possible that actually the entrepreneurs may benefit from increased credibility and visibility. But what would an investor look for? So investing in businesses is a great way to increase wealth, and the primary element of an attractive opportunity is the growth potential. They're also looking for sound management practices and plans for expanding into new markets or services. So companies with solid histories are prime candidates, as they tend to perform better over time than those that have just started and have yet to gain experience in generating profits. But how do you prepare your business for getting investment? So securing investment and raising capital for a business is a complicated process. It requires strategic planning, the ability to sell your business plan, and an understanding of the economic environment. And that's the same for wherever you go for extra funding. The first step is to create a solid blueprint for success by developing a clear vision statement, mission statement, and financial projections, and then communicating this concisely and compellingly would be a great way to give potential investors confidence in your business model. You want to identify who is most likely to invest in the business. So angel investors or venture capitalists may be interested in investing if your idea's got strong potential for growth or they may profit from the company shares. Banks and institutions are more likely to be interested in track records and sustainability. Asset and invoice financiers will focus more on the security of the value of the assets and income. So you want to have data on your industry and the market that supports your growth plans. Any investor will want to see the potential profitability in their investments and to make sure that they can get a return. And they're also more likely to invest if there's evidence that the company can generate significant returns for them. You'll also need to put together a persuasive presentation highlighting why someone should choose you and your venture over somebody else they may have previously seen. So how is a business plan used to help you fund your business? A business plan, as we know, is essential for any business venture, but it also serves to outline the organisation's overall strategy. Business plan can help secure funding from investors and lenders by helping to give them a detailed pitch, a pack, that ensures they can assess whether your enterprise is likely to achieve its goals successfully or not. Describing products and services, outlining target markets, describing expected costs, and setting out projected financial returns. Additionally, it's critical that you present your business strategies for marketing, sales, customer service, and operations management. Ensuring that these aspects are addressed will increase the chances of a successful outcome when applying for that funding. For entrepreneurs and small business owners, the finding investment is one of the most challenging and intimate parts of scaling a business. But fortunately, there are many resources available to help you find investors who can provide the capital you need. And of course, at Action Coach and within our community, we've got a number of contacts that will be able to help you with further information. So feel free to ask the local community or reach out to your local coach for an introduction for somebody who might be able to help.